The opening bell, followed by another plunge in the market and a halt to trading on the New York Stock Exchange. By the end of the day, the Dow down 12.9% and the S&P down 11.9%. The worst percentage drop by both since 1987. And the worst Dow point loss ever, the previous two records set just last week. As the markets were closing in New York, in Washington, President Donald Trump was asked if the country was in a recession.
Well, it may be. We're not thinking in terms of recession. We're thinking in terms of the virus. Once we stop, I think there's a tremendous pent-up demand, both in terms of the stock market and in terms of the economy. And once this goes away, once it goes through and we're done with it, I think you're going to see a tremendous surge.
The trading day was so bad, the president of the New York Stock Exchange had to shoot down rumors that the trading floor might close down, tweeting, "Closing the markets would not change the underlying causes of the market decline. This would only further compound the current market anxiety." Over the weekend, the Federal Reserve lowered interest rates to nearly zero, hoping it would calm the markets. It did not.
They lowered the rates on Sunday. Market is telling us that they're not that happy with that. If we're lowering it, if we're shooting every bullet out of the chamber, leaving us at zero, is there worse economic news on the horizon than we think?
Investors say they need three things to happen for the market to bounce back: a slowdown of coronavirus cases in the U.S., an announcement about a vaccine, and a sign that things are returning back to normal on the streets. Unfortunately, none of those things appear to be happening anytime soon. As one Wall Street analyst put it, we're watching the slow shutdown of the entire U.S. economy. Gabriel Elizondo, Al Jazeera, New York.